We're going to do this one here. This one here. We're going to do that one there. That's ready to go. That's ready to go. That's ready to go. That's that, and that. Let's do this. 2, 6, 4, 4 T. I wonder how do you trade? Simple. We're gonna get inside a little bit. YouTube is open. I just got started. Let me know if it's actually working at the moment. Red Lady, good evening. Red Lady, good evening. Classy lady, good evening. It's now or never. With Trevor. How you doing, Trevor? With Trevor. Gary Von JJ, what's going on? JJ, what's going on? Mooncat. Thank you there, Mooncat. KVX. Yulia. Good evening. Let's keep moving. Keep the ball rolling. Okay, good. Crumtoid wants to take a look at the VIX. I got a problem with the VIX. Okay, the VIX does have weekly options. So why am I looking at it? That's the question. Why am I looking at the VIX? Don't get me wrong. I know what it is. I know what people use it for. But why am I looking at it? Well, you have weekly options. They got weekly options. Just for market movements. Well, it doesn't really tell me anything about the market movements, and I'm not looking at the market in a whole. I'm looking at individual companies. Okay, because there's something always going up. There's something always going down. It's just what stock do I like looking at today? Well, here you go. Here's the VIX. The high, the low, where is it going? How do I trade it? How do I profit off of it? And does it look as if I can make a profit? Look at right here, profit. What's going on the last 30 days with the VIX? Okay? Looks like it's just going sideways. 14, 16, just sideways. No big moves up, no big moves down. Okay? And I don't think the VIX actually has any dividends. Crunk, come on, dude. I look at SPY every single week. Do you even look at the numbers for SPY? Right, here we go. SPY. Okay, hold tight. Cruntoid wants to take a look at SPY, the S&P 500, the SPY. So let's take a look at it. I'm going to give you my opinion on it. You're not going to like it. Nobody ever does. Especially those people who like SPY. And say, hey, can you check it out? Like you're all excited. What is the SPY doing? It's not that great. Okay. Here it is right here. Okay, Crunk, take a look at this. $649 per share. $649 per share. Now, let's take a quick gander at this for a second. Okay? Do you see this right here? That number gives investors such as you and I an idea of what kind of return we can expect. So if you see this right here, 1.13% yield, 1.13% yield for the year. I'm not quite sure why you think 1.13% for a year is a good thing. I see. New chart. What happened to the old one? This is Yahoo Finance. Totally different. Okay. And this is just one day. That's just one day. That's not the whole year. What does SPY look like for the whole year? Okay. And this is just one day. That's just what I look like for the whole year. Let's get out. We don't need that. But that's not what I'm looking for. But that's what I'm looking for. What can I expect from SPY? Okay? 1.13. Sorry, that doesn't thrill me. But let's take a look at the profitability. How consistently profitable is SPY? So for that, we're going to need historical data. Now, the nice thing about Yahoo Finance, you can go all the way back 10, 20, 30, 40, 50 back 10 and look at the opening of the day, the high of the day, the low of the day, the volume, how many shares traded. You can look at all that information. You can buy and hold S&P 500. That's an old saying, right? It is. But who says it? And what is it that they're trying to sell you? Now, if you take a look at the S&P 500, it's great for those people who want to set it and forget it and don't really care. Because if you look at the last 100 years, the S&P 500 has averaged a return of 10% per year over the last 100 years. Okay? Simple. That's not what I'm looking for. I'm not looking for 10% per year. I'm looking for 1% every week. Because there's only a few bills that I have that come due once a year. That's my property tax, my insurance on my vehicle, stuff like that. Okay, the insurance on my property. Michael, good evening. All right, hold on. Dylan, what's going on? Deb, what's happening? Michael, thank you, dude. Thank you, dude. Live stream, thank you. Alex, the terrifying. God bless. Christ loves you. Thank you. Thank you. That means, but all right. Now Eric wants to take a look at PSLV. What the hell is that? Oh no! My goodness! Crunk. I have no idea who you are. I have no idea what you're looking for. But from everything you've told me so far, you are in the wrong place, dude. Everything you asking me to look at is totally contrary to everything that I want to do. I want simple, safe, predictable, consistent 1% I don't like risk. Let's take a look at the numbers. Let's take a look at before we move on. Flash, hey, James is working well. Way to go, Flash. Don't be too quick to judge. So, Crunk, you've been here for a few days. I've noticed the name. You have been here for a while. Noticed the name. We're going to take a look at historical performance on SPY. And I'm going to show you the actual, you like this, ready? Here we go. The actual factual numbers. They're not my numbers. This is Yahoo Finance. I got nothing to do with these. I'm just reading these. All right, so we want to look at the historical prices and the dates. And let's look at just the dividend. Now you do know dividend is a portion of the corporation or the entity's profits that's been given back to the investors. And that's us. We are the investors. Okay, now I want to look at all of them. And Crunk, I want to go back. Years, all the way back to 2005 to take a look. Is S&P the spiders actually profitable? Let's take a look at the numbers. Here we go. Here's 25. 22, 21, 2020, 19, 18, 17, 16, 15, 14, 12, blah, 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 blah. Here he goes. 2005, right there. All right, Crunk, are you ready for this? We're going to go one at a time. Now, the way I look at it, if a company I'm going to invest my money into, I want to make sure they make more money this year than they did last year. I want to make sure they're going to make more money next year than they did this year. So short, sweet, right to the point. Every single year, every single dividend should be higher, as the days go by, as the years go by. So let's go all the way to 25. Here's the very first dividend of 2025. It's 46 per share. Okay. 46 cents. So if I get 1,000 shares, I'm getting $460. 1,000 shares, $460. Okay. Ready? Here we go. 46, 48, 52, 67. That looks pretty damn good, right? Higher. Hold on. 56, 48, 50, 67, 51. Now hold on a second. Now I didn't go to college. I admit. Terribly sorry. I did the service. Okay, took the pass list. Travel. I joined the service just out of high school. But I do know. Okay. This is flag 1973. My math teacher will tell me, James. 51 is lower than 67. Because if 67 is the dividend, And the next dividend is 51. Well, that's not higher, that's lower. Okay. Higher. Okay. So where are 46, 48, 52, 51. That's one time. 55, 57, 79. We're on 2006. 79. 55, that's twice. 60, 71, 77. 64 is three times. 66, 69, 71. 56, four times. 51, five times. Went backwards. And we're on 2009. Okay. 2009, 51, right there, 2051. 50, 6 times. 59, 48, 7 times. 53, 60, 65, 55, 7 times. 62.8, 62.5, 8 times. And we're on 2011. 8 times since 2011, this thing had gone backwards. Okay? I'm terribly sorry. I know how to count. Didn't go to college, but I know that 2 is higher than 1. I know that 4 is lower than 6. So just by reading numbers, 59, 48, that's backwards. From 59 to 48 is backwards. Why the hell are you putting your money into something that's not consistently profitable? Now you say you want to do MSTY. It's like, dude, don't you read any numbers whatsoever what you're buying? Seriously. Let's go take a look at MSTY. Okay. MSTY. Okay. So I'm beginning to question your intelligence. Really, I am. So far, everything you asked me to take a look at leads me to believe that you're one of those people. There's nothing wrong with those people, okay, that put their money into whatever someone else is telling you to put it into, and you don't really look, or you don't research. Number one, MSTY is not even 2 years old. The first dividend they paid out was April 2024. It's not even 2 years old yet, dude. They haven't found their sea legs. Most companies don't make it past 5 years. Okay, let's take a look at the numbers. All right. Very first dividend, 412. The very second dividend, 250. That's like a 40% drop. How can you possibly say the second dividend being 40% less than the first one? I begin questioning. But hold on. It actually gets worse. Really does. First one, $4.12. Second one, $2.52. That's about a 40% drop. 303, that's higher. 233, that's lower. 194, that's lower. 185, that's lower. Then we jump back up to 419, 442. Okay, 442, 308, lower, 227, lower, 202, lower, 137, 133, lower. Dude, there's lower. It goes backwards than it goes forward. There's a reason why there are financial websites that are free. Most people can't invest because they don't know what they're doing, and they don't want to learn. Okay, the information is free. Why don't you just go take a look? If you're going to put your money somewhere, why not put it someplace that lines up with what it is you want? Do you seriously want to put your money into a company that loses more than it wins? Okay, and I see what you're looking at. The stock price is $15. Well, if you take a look at the stock price was years ago. Well, you know what? I'm not even going to bother. The numbers are horrible. MSTY. Do yourself a favor before you put your money anywhere. Do some research. But before you even do that, figure out how are you investing in the first place. If you're not very good at it, give it to someone else. Let someone else do it for you. Who else do we have today? Brez, what's going on, Brez? What do we got? Gary already did. JJ, Mooncat did that one. Just me, evening from New Hampshire. Ooh, how are you, New Hampshire? Uh-oh. P. Everly wants to take a look at Tesla. Tesla. Okay. All right. Hey, Krungtoid. Don't feel bad. I got some people on the other channel want to take a look at the Qs. They're almost as bad. The Qs. What other piece of crap? VOO. They want to look at that one too. All right. Anyway. Okay. So P. Everly wants to look at Tesla. Now, normally I don't do Tesla because Tesla doesn't have dividends. They don't share their profits. But I'm getting ready to open up a hedge fund, and I'm getting ready to start helping people with their own finances. Okay. There is no way at this moment in time you can continue to. I can't continue to ignore what Tesla is doing. Okay. All right. So if you take a big global look at what Tesla's doing. Okay. Rockets. He wants to go to Mars. You're gonna need a rocket. Well, what happens when you're there? Well, you're gonna need some kind of energy source. Right. He owns a solar electric company. There's no shade trees. There's no shade on Mars. So he's got the electricity power that he needs. Okay. Well, people can't live there. Don't need them. He's got a robot. He can send them up there. He has artificial intelligence to run the robots. Okay. He has that tunneling machine. Allow you to dig into the ground in Mars. Once you dig underground, it's easier to seal it off. What oxygenate the scenario. So he is setting everything for space exploration. Now, some of you may like him, may not like him. Really doesn't matter. Because in 50 to 100 years, history is going to remember this guy. History is going to remember this company. And there is no way to ignore it. Because in 100 years, they're going to say the first man to settle on Mars. Tesla. You can't get away from what he's doing. So yeah, I am going to have to figure out a way to safely invest into Tesla, even though they have no dividends. And more than likely, we're going to end up using a seasonality chart. Now, for those of you who don't know what a seasonality chart is, let me briefly show you. Okay, this here. I don't want the VIX. Don't want the VIX. TSLAES. Okay. This here is what is called a seasonality. You can set the parameters however you want. I have mine set for 10 years. I want to take a look at data from the last 10 years. I want to see where does this usually move? How does it usually move predictably? Okay. See, I'm 61. I'm retired. Unlike some of you, I don't have the luxury of being wrong. What do I mean by that? Well, if I'm wrong, I have to go back to work for someone else. I have no desire to do that. I don't know why I say that. I very rarely ever work for someone else. Okay. Most of my life, I was self-employed. I'm one of those weirdos who gets to make his own hours as much as I want, as less as I want. Okay, self-employed. That's what I did for most of my adult life. All right. But here, seasonality chart. The blue line represents the movement for this year. The red line represents the movement predictably over the last 10 years. Now, if you really want to get into the brain mathematics scenario, it can get complicated. But this is the average what the stock normally does. So do I want to buy the stock here? No, it goes down. Do I want to buy it here? It goes down. But look at this. It goes up there. So by looking at the stock normally does, well, that gives me an idea of what to do next. That's a seasonality. You can do that with almost any stock out there. Now this here is set for 10 years. That's 10-year moving average. What has it done? Year after year after year. Consistently. Predictably. Okay. Now I didn't get to introduce myself. I want to apologize for that. We just got right into the questions. I wanted to help out here, Mr. Crunk. Anyway, my name is James. This is Dividend, brought to you by the 10 Trader. Now you may or may not know Trader is. My 9-year-old daughter. I should say it was my 9-year-old daughter. She's 26 now. She's about the same height as me nowadays. So I remember when she was little, she was like this tall. Like she used to be so cute and cuddly. Anyway, so in 2008, my 9-year-old daughter jumps up on my lap and says, "Daddy, what are you doing?" All right, so I'm getting ready for. Hey, can we go to the store buy a bunny rabbit? Or chipmunks? Or how about gerbils? Guinea pigs. A bird. Rabbit. Oh, let's go to the store to get me a dress. Or can we go to the store and get some ice cream? No. She said, Daddy, what are you doing? Can you teach me? So imagine that 9-year-old daughter jumps on your lap. Say, what are you doing? Can you teach me? Most adults don't get it. Most adults don't invest because they don't understand it. And here is a 9-year-old. Now she wasn't a Mensa student. Okay. She was not an honor roll student. She was your average, everyday, normal little girl. Daddy, what are you doing? Can you teach me? Okay. So trying to be the good dad. No, I do have my flaws, but I do try to be a better parent than my parents. Okay. I mean that's our goal in life. Try to make children's life better than our life. And trust me, my life wasn't that glamorous. It was pretty shitty. But you know what? I'm not complaining because it brought me to where I am today. And I am pretty okay where I am. All my brothers and sisters, except my brother who's disabled. All my brothers and sisters are still working. All of them. The ones that are older than me, the ones that are younger than me, the ones that are younger than me. I'm the only one in my family to retire at 59. Why? Because I didn't find it. I was asked to create it. Because the 9-year-old says, Daddy, can you teach me? So now, here you go. I have a problem. How do I come up with a trading strategy for a 9-year-old? No, I'm asking you guys if you know the answer. Okay. Most adults don't get it. So my 9-year-old, Daddy, can you teach me? Great. It's got to be simple. She's 9. Come on. Let's call it what it is. Simple. Safe. I didn't want her getting upset and losing. Because Mama's going to get. Because my little daughter's unhappy. Mama's going to get involved. And we all know if Mama gets involved in 9-year-old isn't happy. Guess who's sleeping on the couch? Yeah. I had a very good couch. It really was. It was a nice couch. Anyway, besides the point. Simple. Safe. Predictable. Consistent. And here's the big. Ready for this one? No way for her to lose. That fifth one gets everybody. Now that being said, that's the criteria. How do I overcome? How do I create the trading strategy for 9-year-old? Well, number one. Now this was specifically for her, and we're gonna tweak it a little bit, for the audience, for you guys. Rule number one for my 9-year-old was: if it's not on the list, it's absolutely no. Don't even bother looking. Not on the list. Don't even bother looking. Rule number two: never sell at a loss. It's the purpose of the game. And yes, agree or not, it is a game. Kind of like Monopoly. 4 red houses, one green hotel. 4 greenhouses, 1 red hotel. You know. It teaches you how to budget, how to save, how to invest. Well, this is basically the same thing. But this is real life. This is real life. Okay, great. Rule number 3. This one. Crunkle, you ready for this one? Make sure the company is consistently profitable. Danielle, thank you for that. Make sure it's consistently profitable. Now we've already looked at two of them tonight that weren't consistently profitable. And probably by the end of the evening we will find some more that are not consistently profitable. It always boggles my mind why perfectly seemingly rational adults will invest in companies that are not profitable. That one I can never understand. Rule number four. Weekly options only. Okay. I'm looking for weekly cash flow. The only way I'm going to get weekly cash flow is by buying and selling something that trades on a weekly basis. Okay, an option I can sell on Monday, Friday it expires, and hopefully I'm going to make the money. That's what I'm looking for every single week after week. Rule number five. Make sure all the numbers work. Now you probably don't understand a lot of that at the moment, but just like a good movie, all the details are going to come together, and it's going to make sense. Hopefully by the end of the day. Now I'm going to make you a couple of promises. Promise number one. I'm not going to try to sell you anything. We're all adults here. We know how it works. I've been doing this long enough. You know I've written books. I get courses. I get a trading group. It's all paid for services. I'm not going to try to sell anyone anything. Now last night, a couple of people said they would send me their numbers. I give them a call. Now I said it every night. If you want to have a conversation, chat, send me your number. DM me your number. And I personally, I'm not going to pawn it on someone else. Me personally will give you a call back. Okay. No, I didn't get any phone numbers this morning. A couple people said they were going to send me their number. They didn't. That's fine. I don't mind. Look. I wouldn't do that. Omar, thank you. I wouldn't do that. You look creepy. Thank you. Joe, he is teaching science. No, I'm not. I'm investing dividends for weekly cash flow. But thank you there, Joe. And Omar, just joking. Okay. You gotta be careful with the joke. Some people don't have a sense of humor. And you kind of like this channel doesn't have a moderator on here. And if there was a moderator on it, they would block you and you wouldn't be able to interact. I know it's only three. Yeah, because you're on the newest channel. And this channel you're on, there's no advertising whatsoever. So people this channel have no idea what I'm doing. I know. How the internet works. Thank you, Omar. Okay, so that being said. Rule number five. Make sure all the numbers. Now we're going to go over a few trades as the night progresses. You guys can ask whatever questions you want. But please, when you ask me to take a look at a stock, please make sure it has weekly options. And try to do profitable companies. You know, I know some people get bombarded with marketing information. You're going to buy this. This is going to be the next best thing. It's marketing for a reason. They're trying to sell you something. Do a little bit more research. Look under the hood. Old man, Omar. Thank you, Omar. You know what? Hope good as I do at my age. I'm 61, 62. Not many 62s can do what I can do. I still play soccer. Out there with the guys in their 20s and 30s. Granted, I can't keep up with them like I used to. But hey, 60, I'm doing pretty damn good. Anyway, let's keep on moving. Let's get out of this. Stop looking at some stocks. So Beverly wants to take a look at Tesla. Okay, now as I said, here's where Tesla is at the moment, right here. But look at this right here. It's still going up. Normally. This time it normally goes up until right about here, and she pulls back a little bit. Okay. So maybe I can get another week out of it. And then she pull back. Look at the fourth quarter. The fourth quarter, nice. Okay, so we're going to be Tesla closer in the fourth quarter. Just to let you guys know, the hedge fund starting is getting pushed up. We were going to start in January, but I got the paper pusher out there in the audience somewhere. They want to jump on it. It looks like the first of December. Okay, and we're going to be guaranteeing 20% returns if you're interested. However, when the corporation is actually they give the go ahead. Can't advertise it. But until then, right now, it's not incorporated yet. So I can do all the advertising I want. I can say whatever I want to say. I've been doing this for 2 years. This live for 2 years. I have videos doing the same thing all the way back to 2011. So you can do my research on me. I got nothing to hide. Okay, I've been online since the 90s. All right. Anyway, let's go take a look at Tesla. This is what we can look for the next couple of weeks. All right. Here's today. Right here. 9.4. Nice steady upward trend all the way up to the third week. If you like Tesla, of course. So let's get out of here. Right. Here's the one-year chart for Tesla. Now, anytime I look at a one-year chart, it takes me 3 to 4 seconds to find out everything I want to know. 3 to 4 seconds, right? I'm looking for five. Let's call. Where's Waldo? Where's Waldo? Five of them. High, low. Where was it? Look at the motion. Down, up. That's 3 to 4 seconds. It doesn't take that long. Simple, quick, right to the point. Up, down, up. 338. 338. So if I like Tesla at 338, you got the 337. It's going for $8.65. That's well over 2%. But the big question. Does it make sense? If I buy the stock, someone else pick up 2% for 1 week. Great. What happens next? Now, if let's zoom into this a little closer, because step one, come up with a list of stocks. Remember I told you it's not on the list. It's a no. List of stocks. If you got a pencil, you might want to write this down. Dividend Kings. 5 decades of increased profits. Dividend champions. 25 years increased profits. Dividend aristocrats. JMF. Woohoo! Dividend aristocrats. 25 years increased profits. Dividend contenders. 10 to 24 years increased profits. List number 5. Hey, if it's good enough for Warren Buffett, let's peek over his shoulder and see what he's doing. So those five lists give me about 300 different companies. Now, just in case you were wondering, every Sunday, I do Sunday nights. Every Sunday, we check to see how many companies they've added. Well, they took a couple away this week because last week there was 10,356. Well, this week there's only 10,353. What are we going to have next week? Don't know. We'll find it on Sunday. Okay. But they come, they go. But out of those 10,354 companies that we can buy this week, what ones fit? Think about it. What are you looking for? Okay, you're here to learn something. We're all here to learn how to make a little bit of money here and there. There's a lot of guys out there just like me doing the exact same thing. We all have our own different approach. My approach works fine for me. Simple, safe, consistent, 1% per week. Created for a 9-year-old. Okay. I like it. The reason why I like it, I can do 10 minutes and go to my day. 23 hours and 50 minutes to do whatever I want. Take a nap, sleep, go to movies, eat, play in the garden, work on my boat, do whatever I want to do. You have got to figure out what is it that you want. Because when you reach retirement, you got two choices only. Two. Don't let anyone fool you. Hold on a second. Ginger tea and honey, good for the vocal cords. When you get retirement, you get two choices and only two. You can learn how to do it yourself. Take responsibility for your own money. Make your own investments. Make your own choices and decisions. Get the kind of return. 1% a week is not bad. Depending on how you look at it. Retire. Hey, that's 50% a year. So my last egg, if I got $100,000, 50% of that's $50,000. Tell you what. If you second choice, give it to a professional. They will take all that money you got and they'll give you a 4% draw. Do you know what a 4% draw is? Okay. $100,000 will give you $50,000 a year. 1% a week. 4% draw. You're going to need over $1 million because $1 million. 4% draw is $40,000 a year. No. I'm no genius, but I do know it's a hell of a lot easier to get 100,000 than it is to get million. And if a million in the hands of a professional is going to give you 40,000 a year, and 100 grand in the hands of a totally inexperienced trader is getting me 50,000. Well, 100 grand is easier to get than a million. It's a number. It's not how you look at it. Now you may not want to do it. You may want to give it to someone else. If you have the means, fine. Go ahead. Some people get 10, 20, 30, 40 million. Well, 4% of that, that'd be very nice. But unfortunately, however much money you think I have, I probably don't. But I have enough to take care of my own bills. I don't ask my children for money. I don't ask my parents for money. I don't ask anyone for money. Never. I take responsibility for my own actions. I take responsibility for my own bills. All right. Let's see what kind of questions we got. All right. Let's go back to here. What do we have here? Okay. DJ wants to take a look at Ben. Isn't Ben Franklin, aren't they a optionable stock? Don't get me wrong, it's a great company. They have been in business for quite a while, and they're consistently profitable. However, I don't do monthlies. September, October, January, April, January. Okay, the difference between a monthly optionable stock and a weekly optionable stock. It's let's call it elementary. Okay. Monthly, once in a year, which means I can trade it 12 times. Weekly, 52 weeks in a year, which means I can trade it two times. So DJ, ask yourself this question. If I'm getting if everything's equal, and I'm getting 1 to 2% for every option trade I do. If I do a monthly, at the end of the year, that comes 12 to 24%. Now, 24%, you might think, that's wonderful. It's wonderful. Look at the other side. 1 or 2% a week is 50% to 100% return per year. A little bit more work. Terribly sorry. You work, you get rewarded. More time, effort, and more money at the end of the week, the end of the month. However you want to look at it. So I don't do monthlies for two reasons. Reason number one, I can only do 12 times a year. 12 to 24% doesn't throw me at all. Worst case scenario, check this out. Right there. All right. DJ. This here is 30 days. All right. Bottom, top. Where was it? Is it up, down, up, down, up, down, up. Okay. Anybody can see that. Now, DJ. 30 days ago we're here. Now we're here. Now, tell me, where is it going to be in 30 days? Okay. That's 30 days. Where's the next 30 days going to bring it? That's the challenge of a monthly stock. You have to kind of guess where's it going to be in 30 days. Well, 241. Wait a second. Oh, sorry. 24, 20, 26, 20, 24, 40, 25, 80. That's the move of last month. Now tell me, where is it going to be, or where does it look like it's going to be in the next 30 days, the next month? Okay. Let's take a look at this right here. It's currently at 26.60. The closest strike price is going to be 27. Okay. See this? 26.60. So I can buy it for tomorrow morning. The closest strike price is 27. The 27 strike price is paying 10 cents a share. Did you hear that? 10 cents a share. That's not even half a percent. For two weeks. So this goes 2 weeks. Okay, it's 2 weeks until this one expires. The next one, October. 26. It's going for 65, 27, 50, it's going for 24. What's that? 26.60. The closest strike price is 27. It's paying 20 cents. Not even 1%. But I gotta hold it 40 days. Now 43 days is 6 weeks. Do you see the issue there? I'm making not even 1% for 6 weeks. This is why I don't do monthlies. The numbers just don't work for me. Okay, if you like them, great. If it works, great. I'm not trying to change anybody's mind. I'm just showing you what works for me, what doesn't work for me. I don't do monthly. Trying to guess where it's going to be the next 30 days. Yeah, no. And then the numbers. They don't work. I don't think I've ever seen a monthly that gives me what I'm looking for, and being able to figure out where's it going to be in 30 days. I don't do monthlies. They just don't work for me. All right, Crunkle, you want good distribution, get into blue chips, covered call. Crunk, that's exactly what I do. Okay, if you heard what I said, Dividend Kings. Well, Dividend Kings are the cream of the crop. 3M, Home Depot, Lowe's, General Parts Corporation, Consolidated Edison, Northwest National. There's a whole bunch of them. Okay. All good quality blue chip stocks, and all good quality blue chip stocks. If they give me 1%, why wouldn't I buy them? 2644T. That's a lot of time. Okay, I'm terribly sorry. I get six screens in front of me, which means I get a whole bunch of questions. No questions over here. Whole bunch of questions. No questions. Why don't you guys have any questions over here? Okay. Nobody over there. Jet either. So I try to go back and forth to all the different platforms. Okay, so I'm live streaming on 9 different platforms. So I have nine. Well, 1, 2, 3, 4 sets of questions at the moment. I can't read them all at once. So I go back and forth. I try to answer as many as I possibly can. So when you ask a question, please make sure to ask a complete question so that I can read it and get an understanding of what you're trying to ask for. That's a lot of time. No idea what you mean by that. I mean, I know what the word and phrase means, but where does that fit what we're doing? All right. Where do I start investing? Over Black or Park. How are you doing today? Alex, terrifying 67. What does that mean? 67, Alex. Please only ask it once. Thank you, Dylan. How much money do I need to invest in stocks? Well, you can do it with fractional shares. Matter of fact, we threw a program together specifically for grandparents and grandchildren. Okay. So my grandson, me and the other in-laws, and my ex-wife, we all agreed to take our change, pennies times quarters, throw it at the jar at the end of the week, we added up. $3, $4, $8. My grandson's 5. He's got 13 years before he even touched the money. So fractional shares, I can put $3.50 into IBM if I wanted to. Okay, I can buy $2.15 of AT&T. Fractional shares allows me to do that. All right. What else do we have here? Connor, do you ever trade from a quantum perspective or purely fundamental technical? Connor, this is exactly what I'm doing. Fundamentally is the company good quality company. That's fundamental. Technical is up, down. Well, it's going up right now. That's a good idea. Technical. Up, down. That's technical. Is it consistently profitable? That's fundamental. That's a big drop. Under influence. Good afternoon. How are you today? Connor, what equation do you factor into your theory? My theory. You ready? Connor, this is for you. My theory is if a 9-year-old can understand it, okay, that's all I need to know. stock goes up, means the stock goes down, means it's going down. I'm not quite understanding what factors you're looking for. Number one is either a good company or it's not. Number two, it's either profitable or it's not. Number three, if I buy into a call on it, I'm either making money on it, the amount I'm looking for, 1%, or I'm not. It's simple, yes, no, something that a 9-year-old can understand. Now, I get my 5-year-old grandson. You've seen him every once in a while. I say, hey, little buddy, where's the high? Hey, it's right there. Say, hey, little buddy, where's the low? Papa G, it's right there. And then he can take the stylus and look, Papa G's going up, it's going up. Adults have a tendency to make this more complicated than it needs to be. Connor, my theory is up, down, up. There you go. That's my theory. What goes up? Who came up with that song? What goes up must come down. Spinning wheels. Was that Three Dog Night? I have no idea. Bread? Maybe. I don't know. All right. Let's keep on moving. What about open? What about let's put it in here. OPEN. Hell no. Wasn't that quick? It takes me 3 to 4 seconds to take a look at a stock. So why did I say hell no so quickly? This thing was 50 cents a couple months ago. How can a company at 50 cents, 2 decades, 20 years of profitability? That means they increase their dividends for 20 consecutive years. At 50 cents a share, I don't see it. I don't waste my time with it. Simple, right? Quick. Hell no. Gerson on Sol. Okay. Epic. If you can explain that to me in proper English, I'd love it. 2644. It's been active lately. Okay. Same thing. 50 cents a share. In my humble opinion, I could be wrong. If you'd like to prove me wrong, perfect. Go to Yahoo Finance and take a look at how consistently has this company increased its dividends to its shareholders. 2 decades is what I'm looking for. There's 10,354 companies. Okay. I look at 300. Where does this fit? Have they been consistently profitable and increased their dividends for 2 decades? At 50 cents a share back in July, I seriously doubt it. But I could be wrong. Good evening, sir, from San Antonio. Brandon, you want to take a look at Ford? Now, we looked at Ford yesterday. It was a little on the high side. So basically, we're going to wait for it to pull back. See, here's your low. Shoots up. Here's your top right there. From $12 to $11.68. Not enough of a drop. I would like it to come down a little bit further. Jump into it. With the last 30 days. Okay. 30 days goes your bottom. Shoots up. Now it's coming back down again. Maybe we'll look at it next week, the week after. Mark B, good evening. I'm sure you'll be successful. Thank you. I'm already successful. DJ. Vale. Isn't that like Vale, Colorado? Interesting. High, low, where was it? Down, up. 10.26, 10.50. Not this one. This is tomorrow. 10.50, 7 cents. Sorry, dude. 7 cents less than 1%. Okay, 1% of $10 is 10 cents. I'm looking for 1%. Now, don't get me wrong. I've done Vail before. Not that often because the numbers just don't work. This week just doesn't work. Sorry. I thought this was Tony Hawk. Of course this is Tony Hawk. Wait till you see me on my board, dude. No. Nitsa, good evening. Ari. Tronos. Ari, do me a favor. You gotta give me the ticker. I've never heard of that company. Okay. What else do we have? The Dutch. Daniel Jacob. How are you, Daniel Jacob? Hey. Lit up donut. Thank you, Daniel Jacob. All right, so we're almost done with these questions over here. How do you feel about the ticker symbol? Cletus. Now, Cletus. I'd remember that name. You're relatively new here. Cletus. When I tell people I only do weekly optionable stocks. Apparently, you weren't listening at that moment. Okay. September, October, December, January. That's what's called a monthly optionable stock. Not only do the numbers not work. Up, down, up. That's 30 days. Tell me where's it going to be in the next 30 days? Trying to figure out where a stock's going to be in 30 days. Yeah, there's a lot of software you can throw at it. The MACD, stochastics, you got the moving averages, the Elliott wave. You got a lot of stuff you can play with. A lot. Think of Swim has a huge amount of stuff. But still, you got to figure out. It looks like it's going up. Now, I can say, the next 5 days. Well, that's easy. Because you got your bottom here, top here, back, here's now she's going back up again. 5 days is easy. 30 days is not. Then look at the numbers. 58, 28. Okay, the 57 is going for $1.20. That's 2%. For the month. What's next month? $57.60. That's 3%. 3%. Well, 43 days. That's 6 weeks. That's a half a percent a week. And then I got to figure out where's it going to be in 30 days. No, thank you. When I say the numbers just don't work on monthly. No idea why people keep asking me to take a look at them. Blood, sweat, and tears. Cool. Thank you. One goes on. How exactly do covered calls work? You sell a contract in the money and buy a contract in the money. No. That's the spread. So you buy two separate contracts. Okay. A covered call. You buy the stock. Okay. There's a difference between a stock and an option. An option is like an insurance policy. Exactly what it is. An insurance policy. Because you're insuring against loss. Insuring against. Well, basically insurance against loss. Basically, you bought the stock here, 58.28, and you were fearing that it was going to drop. You buy an option. And if the stock dropped, the value of the option would increase, so you wouldn't lose any money, except for the premium which you paid. So that's what I'm looking for. I'm looking for collect the premium. Here they are, right here. Call options, put up. I'm looking for the premium. And for me, the premium has to be at least 1% of the purchase price. Baby Bowie. Ray Shrimag. I have no idea what that means. Uh-oh. Okay, Crunkle. Don't feel bad. Somebody wants to take a look at the cues. So when I say, no, don't get me wrong. I don't expect anyone to listen to me. I'm just some random guy on TikTok or whatever. You really shouldn't listen to me. Whatever I have to say. Go do your research. Is what I'm saying true, or is it not true? Okay, you should always never trust anybody online. Okay? Now when I say if you want have a conversation, send me a number, I'll give you a call, and then maybe we can come up with some kind of go from there. But for the most part, do your research. When I say check the numbers. Okay. When I say check the numbers, that means not just today's numbers, yesterday's numbers, last week, last year, 5 years, 10 years ago. How consistently profitable is the Qs? So let's go take a look at the Qs and see how wonderfully profitable they were. Q. We're going to look at the last 20 years of the Qs, all the way back to 2005, right there. All right. Who was that? Ilani? Is that right? Ilani? Okay. Ilani, you ready? 2005. 3.5. All right. 10. That's awesome. That's a 200% increase. 3.5 to 10. 2.9. It went from 10 to 2.9. That's backwards. 2.9 to 2.6. That's backwards. 2.6 to 2.3. That's backwards. 5.4. That's up. 2.77 backwards. 3.77 up. 2.6 down. Okay. Shall I go on? I mean that brings us to 2007. Okay. You got up. Down, up, down. And then there's a whole bunch more. Look at all the rest of them. 2.8, 4.3, 4.9, 4.4, down, 4.1, down, 7.3, up, 5.1, down, 8.9, up, 8.9, 11.2, 10.8, down, 7.7, down. Do you see the pattern here? It's not consistently. Let me show you one to give you an idea. Okay. Just to give you an idea. MSFT. Some of you know that's Microsoft. All the way back to 2005. Here we go. Okay, you ready for this? 8, 9, 10, 11, 13, 10, 16, 20, 16, 23, 28, 31, 36, 42, 46, 51, 56, 62, 68, 75, 83. Did you notice each and every single year the numbers got higher? Did you notice that? Every year, higher. Okay, the numbers just kept going up, higher and higher. That's what we're looking for. Companies that are consistently profitable. Q's are consistently profitable. VOO, not consistently profitable. SPY, not consistently profitable. But they are heavily marketed. Okay, I'm sure you got information, email, calls, snail mail. Hey, you gotta buy the Qs. They're awesome. You'll get no. Let's take a look at the summary on the Qs. Oh, wait a minute, that's Microsoft. I don't want to look at the summary from Microsoft. Oh, why not? Let's look at the summary. Just for the fun of it. The summary. The summary page gives you all the ideas. What is that? It's $507 a share. Okay. Earnings per share, $13. Dividend, 3.32 or 0.66%. That's terrible, but still terrible. It increases every single year. That's what I'm looking for. And simply put, I really don't care about this. All I care about is the company consistently profitable. Can I get in? Can I get out with a profit? S7. Okay, Nitsa. Okay, Nitsa Vendrell. AUPH. Never heard of it. AUP. Never heard of it. Let's check it out. Okay, let's check it out. AUPH. No. Wasn't that quick? Nitsa? September, October, January. I don't do monthlies. The numbers don't work. Please don't ask me to go for the numbers again. They just don't work. They just don't work. And why the hell would you be buying at the high? The high is the time to sell, not to buy. Okay. ST17. Should I do sell puts on Tesla? Okay. S17. I have no idea who you are. It would be irresponsible of me to give you any advice whatsoever. You really want to have a conversation? Drop me your phone number. I personally will call you. We can chat. Okay. I guarantee I won't try to sell you anything. The Dutch S. I'm very new. How can you tell if it's a weekly, a monthly? Oh, that's an easy one. You see this right here? This is called the option chain. All right. September, October, January, April, January.
Those are months of the year. Correct. Well. You still with me?
5 September.
That's tomorrow.
12 September. That's
next Friday.
19 September. That's 2 Fridays away. 26 September. 3 Fridays away. 3 October. 4 Fridays away. 10 October.
So on and so forth.
Those are weeks
of the year. Not months of the year. Weeks of the year.
What happens when a stock goes down?
I love that question.
Really do.
Everybody asks that question. So hold on.
Darth Vader
wants to know what happens when a stock goes down.
Okay, Darth.
I'm going to show you something. And you explain it to me. Okay.
You ready? Are you paying attention? Up, down, 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 up, down. Do you see the pattern here, Darth Vader?
They do two things and only two things.
Not once. Is there a little footnote in there saying taking a break, Chuck sells and Chuck sells and feed his dog and take it for a walk?
No, stocks go up, stocks go down. That's all they do.
Up, down, up, down, up, down, up, down, up, down, up, down.
That's all they do.
What happens when a stock goes down?
They all go down.
I've been doing this for 30 years. Never, ever. I can keep going on. Never, ever seen a stock go up. Only. Doesn't happen. They go up, they go down.
That's it.
What we're doing here
is try to find a strategy that works.
Okay.
When the stock goes up, you sell it. When it goes down, you buy it. When it goes up, you sell it. When it goes down, you buy it.
You can do whatever you want.
I'm just showing you what I do. I do it every single day.
No, I don't day trade.
I'm on for 10 minutes on my own personal account.
Okay.
What did I buy on Monday?
What's it at now?
Today's Thursday. So tomorrow at 2:30. Me and all my cronies, my pigeons, my minions, whatever you want to call them.
Okay, we're going to jump on at 2:30,
and we're going to take a look at what happened between when we bought on Monday to Friday afternoon. Because at 3:59 p.m. we can't do anything else. So I want to make sure every one of my minions, whatever you want to call them, not going to lose money. What did I buy it for? What did I sell? How much did I make? Where's it at now? Where does it look like it's going? What should I do? I have two major goals. Two. That's it. Consistency of profitability. Preservation of my capital. That's my two goals in my trading. Consistently having money come in. And protecting the money that I do have. That's it. What happens if the stock goes down?
Dude, they all go down.
They go up, they go down. And if you can't
buy a stock at $29 and deal with it drops down to 23,
not panic and sell, you shouldn't be playing this game. That's all they do. They go up, they go down. That's all. Okay, what else we have over here?
Jish, thank you, you're welcome.
Should I do weekly sell options? Where do you ask that question?
Option chain, got it. Jack Daniels.
You bought American Eagle, but it's not on the list. On the five list. Can you explain?
Yep.
Are you ready, Jack? Hey James, can you buy me some AEO?
Not a problem.
Thanks, Doug. Have a good day. That's it.
If I get a client to call me and say, "Hey, buy me some American Eagle,"
great. I will buy it.
If it looks good,
if it's profitable, maybe I'll do some too.
Now, me personally,
I like companies that are consistently profitable.
I get that.
Every once in a while, I have a client say, "Hey, buy me some American Eagle. Buy me some TSL. None of those are on my list. But if they ask me to buy, I buy it. Simple. Okay. I don't argue with people.
You want to do something?
I'll do it for you.
Alrighty.
Michael, Professor, thank you.
Dylan,
thank you, Dylan. Thank you, Dylan.
Cody, how much money do I need to invest
with anything you want? Michael, you have a good, thank you, Michael. How do I invest again? Cody, take your investment and exit one, blah, blah. What do you think about Macy's? Chuck, Macy's.
Let's take a look at Macy's.
I love Macy's. Macy's was one of my top performing stocks last year.
Do you hear what I just said? Macy's was one of my top performing stocks last year. Look at this. 18 dropped all the way down to 10. How could that possibly be best performing stock for me? Well, you weren't here. You weren't watching what I was doing. You really want to know? You know how to do it. I'm not going to say it. Okay. Here's the high. Here's the low. Here's where it is. Here's where it is. Shoots up. Pulls back. Shoots up. Now we thought yesterday with a big shoot up like this would drop. No, going higher. I have some Macy's. Next week, I'm not gonna have because I sold an option for it. I'm in down here. I sold someone the rights to buy it from me at 13. Okay. Now it's at 17. 13 to 17. That's $4. That's a 25% increase. From here to 25%. Somebody else got it. I didn't. And I'm okay with it. Why? You know why? Because I got my goal. My goal was 1% every single week. Well, Macy's gave me 1% every single week. And then this happened. Well, good for whoever bought it from me. Share the wealth, I say. Here's an old saying. Some of you may have heard of it. Bears make money. Bulls make money. Pigs get slaughtered. Don't be greedy. Share the profits. If I bought here, I made my profit here already. Okay, somebody bought the option from me. It shot up. Whoever bought it from me, good for them. Bravo. You make money. I made money. You made money. The broker made money. Everybody's happy. I don't see the problem. All right, over here. What do we have over here? All right. What do we have? I missed all these questions. Sorry, guys. Okay. Flywood. We already looked at the Qs. Hell no. Flywood. Look at the profitability of the stock over the last 5, 10, 20 years. Is it really someplace you want to put your money? Look at what the dividends look like. Is it really someplace you want to put your money? Kevo, can you give me a promising stock for Monday financial advice? Kevo, you ready? You've been here a couple of times. You know what's coming. I don't know why you ask it. Are you ready? Dividend Kings. Dividend Aristocrats. Dividend Champions. Dividend Contenders. Warren Buffett. Okay, you want to find a better answer than that? You'll love this one. Right there. Right here, and here, and Warren Buffett's list. Okay, Kevo, here we go. Bank of America, General Motors, Occidental Petroleum, Coca-Cola, and Globe Life. I just gave you 7. Is that 7? 3. I gave you 6. Okay. Those are Warren Buffett's. Not mine. Warren Buffett's. Pompeii Surgical. Pompeii Surgical. You're relatively new. And a little on the pessimistic side. I like that. You got something better than that little saying you got from me. 1% a week. Weekly. That would be some magic. Okay. Pompeii, you're new here. So let's pick on you for a little bit. Now, my mother always said to me, okay, you whatever your mother said, hey, that's perfectly fine. My mother always said to me, if you don't have anything nice to say, you probably shouldn't say anything at all. Okay. Should we do 2024 or should you do 2024? Okay. Now, let's zoom all the way down, 2024, all the way down. Oops, keep going. Now, the beginning of 2024. Here's something for you. Look at this. My very first blog post. August 31st, 2011. Because in 2011, they didn't have video. We only had blogs. My very first blog, August 31st, 2011.
Okay, this one here, 2013. Okay.
You can read it if you want. That's not what I'm showing. That's not what I'm showing. That's what I'm showing you. This is what I'm showing you right here. Okay. So the beginning of last year, 2020, I only had two accounts.
One, two. Okay.
Click on any one.
Shows you the trades right there.
What do we got?
Ford, Comcast, Southwest Airlines, General Motors, CVS. Okay. Well.
Who's that one? Who's that one? Pompeii Surgical. You ready?
2.39. 2.1. First week of January. 1st of January. Week 2. 2.45. 1.3. Week 3. 1.3. Oh, 0.8.
Oh, bummer. I didn't do it. I got 0.81.
All right. 2.8, 0.85, 1.03, 1.63, 2.7, 1.05, 1.8, 2.6, 1.7,
Surgical. Do you see what I'm looking at? Hold it. That's 2024. That may not mean anything. So let's look at 2025. Right there. Here we go. All the trades for 25. Now, 2025, I have three accounts. Let's go all the way back to January. January. That's week 14. We don't week 1. Week 14. 6, 5, 4, 6, 5, 3, 2, 1. Here we go. Same thing. You ready?
4.2, 1.8, 6.1. 2.3, 1.7, 1.8, 1.8, 3.6, 4.8, 3.3, 2.2, 2.3, 3.8, 1.2,
I can do this all day long. Okay, I've been doing this strategy for over 15 years. Same strategy. You can pick up stocks right there. And no, red is not bad. Red is actually good.
Green is stocks I buy. Red is what I sold. 18s, 90, 47, 21, 21. That's a lot. Oh, it's all Intel. Davis, UPS. Okay, I bought it for 114. I sold the 114 options. Exactly what I'm saying now. I got 2.2, $2.29 per share.
That's 2%.
$114. That's the purchase price. 114. The strike price is 114. I got $2.29.
Now 114 and 114 is 28. Well, I got 229 is 2%.
This right here is a 2% trade. Okay, this one here, the $14 call option, 18 cents is more than 1%. UPS, 114. 269, 2%. Harley Davidson, $29 call, 52 cents.
You can do the math yourself, bro. You got a problem with what I say? Fine. Come at me more than what you're coming at with me. Okay. Coming at me with. Okay. No, I have no problem whatsoever for naysayers. I love naysayers. I love trolls because negative people. If you don't have enough, we're not working hard enough. So you're number one of the day. Thank you kindly. All right. So what do we have next? Jack Daniel, further to the above question, under the spread column, named calendar or single. Okay, Jack, I'm here, freely giving you information, which means I have to draw the line somewhere. And I draw the line at one free option strategy. Okay, it just so happens I'm sharing with you for free, simple, safe, consistent, no way to lose if you do it right. Okay, 1% a week, that's 50% per year. Okay, if you want more, guess what? Those who pay attention. Those who pay more attention. Take it for what you will. I only give away one free. That's this one. I'll stay here all night and chat with you guys, and I'll tell you exactly whatever questions you ask. But I will not go further into detail for the other strategy. I do have to draw the line somewhere. One strategy. That's it. Jacob, this is recorded. No, Jacob, this is not recorded. This is being recorded. So it's kind of right, but your tense is incorrect. Okay.
So recording. Okay, it's being recorded. It is being recorded. Okay, I am recording. Okay, so. I remember Mrs. Fader back in 1978. Change. You really gotta learn your English. Have a secretary when I get older. So this is being recorded. Okay. DJ, not a video. I'm watching the game and listening. Thank you. Jacob. Yes, I have no idea what that means, but okay. Okay, Jacob. This is a video, not a real live. Okay, Jacob. This is a video, not a real live. How can I interact with what you're saying? Hold on. 10:05 p.m. on the 4th of September 2025. This is a recording. How can I actually get the right time at this moment? Now tomorrow, if you watch this tomorrow or another day, then it will be a recording. Okay. Yeah. Careful. Not a video. I'm watching live. Where are you on Wall Street? No. Do you live alone? No. Jacob. Whoops. Okay, it's live. Is this guy good hype or real info? Okay, Daisy. I always tell people don't listen to a word I say. If I say something, write it down. Double check. I get no problem. Fact checkers. You want a fact check? You want a fact? Fine. I actually prefer you to do that. Don't ever listen to some bonehead online because they're trying to sell you. I'm not trying to sell you anything. Okay. Daisy, all hype for real info. It's being recorded. Where can we find the recorded lives? They're on YouTube. Hold that thought for 1 second. This is 2025. That's 25. We don't want that one. We want to go back to 2024. 20 right there. Okay, and that's going to give you my social media. YouTube, Facebook, LinkedIn, TikTok, I should take this one off. Podcasting, Twitter, Instagram, books by James. Yes, James has written 14 books. Let's go to YouTube. Okay, so you can see. Come on. All right there. Come on. Okay. The 10-minute trader. 1,100 videos. Yeah, you have fun watching those. Okay. This one's live. This one is live. Okay. Two live videos on YouTube. There's actually three live on YouTube, but not this channel. Another channel. Okay. That's where it is. Right there. Tell us how you trade. No more shtick. Okay. Daisy. Exactly what I've been doing. Haven't you been listening? Thank you, Jose. Muchas gracias, señor. So let's keep on going. What else we got? P. Everly wants to take a look at VOO. Let's get out of that one. We don't need to see this anymore. Okay. P. Everly, VOO. I'm going to tell you the exact same thing I tell everyone else when somebody asks me about a stock that I think is... Okay. P. Everly, VOO. I'm going to tell you the exact same thing I tell everyone else when somebody asks me about a stock that I think is not that good. Just my opinion. Not that good. Okay. $596 per share. Okay. Are you ready? $596 per share. The yield, 1.19%. 1.19%. That's not a week. That's not a month. That's not a quarter. That's per year. 1.19. Why do you possibly think that's good? Hold on. That's good. Let's go take a look at historical data. Let's go take Okay, historical data will tell us, is this thing consistently profitable? Brian wants to take a look at UPS. Okay, Brian, we'll take a look at UPS. Okay, Brian, right now, UPS. It's not coming up. Okay. All right, here we go. First thing I want to do is I want to take a look at historical prices. Okay, I want to see what the dividends are. Okay, are they consistently profitable? It's a yes or no question. Then I want to take a look at all the dividends. Every single one that VOO has paid for the last 15 years. This is only 15 years old. I don't do companies 15 years old. I like 20. I don't do 2 decades. I like 20 years. 2 decades. 2010. Okay, 2010. 55, 52, at 52, at 53, 57, 58, 68, 57, 68, 57. Backwards twice. 64, 68, 94, 68, 74, backwards 67, 73, 78, 91, 77, backwards 4 times. 80, 87, backwards 4. 98, 98, 5 times. 95, 5 times. 100, 6 times. 80, 95, 87 times. 87 times. 8 times. 8 times. Up, down, up, down, up, down. It's not consistently profitable. Sorry, that's no. Okay. Brian wanted to take a look at UPS. Let's go to UPS. See what it looks